Bitcoin and Ethereum Elliott wave analysis, where every 2 weeks we take a look at the markets through the eyes of Elliott wave. One of the best methods at identifying market structures, trends, reversal, making pretty accurate prediction, looking at human behavior, looking at what traders think, and where they get excited and where they get fearful. And it's one of the best tools there is out there, and it's been helping me stay on the right side of the market for the best part of the last, let's say, 5-6 years, since I've gotten a lot more deeply into the Elliott wave. I've been in the markets for the past 15 years, but just in the past 6-7 years I kind of started to really use this tool as a method of identifying where the markets go, where they can retrace, how it can kind of help us navigate the madness that's out there in the financial markets. So let's start by taking a look at Bitcoin, and I always kind of like to start with the naked chart where I don't put any waves on it, and I take a look at just to kind of see what is what is the market telling me, what is the price section saying to us, how candles form, where are the bulls, where are the bears, what are some of the levels that I'm interested in. So just visualizing a 1 week chart, you can kind of see that for the past 3 weeks in here, we pretty much have gone nowhere. And this is a clear sign of consolidation, accumulation into the price. And I have a tendency to believe here, based on the structure that it's forming, that Bitcoin will continue to push to the upside and resume its trend upwards. We had a massive base here at about 30,000. The price was clearly rejected at those levels, and we've gone up in this clean impulsive move. We kind of sold back into this correction, and now we're doing another impulse followed by a very kind of slight correction sideways. Remember, markets can correct down or they can correct sideways, all the while they continue their process of accumulation. So a little bit of indecision here, right near the all-time highs. On the weekly basis, we haven't really closed on a high level, but if we take a look at the monthly charts, you can kind of see that we have made, I think, the highest monthly close ever for the price of Bitcoin, and this is encouraging for the prices continuing forward. So you look at this big sell-off that happened back in May, and we really didn't get much of a continuation lower. The markets kind of stabilized, and we continue to resume the uptrend. So the markets continue to remain moving from the lower left to the upper right. I'm trying to trade and stay with the right side of the market until proven guilty, and at the moment that doesn't seem to be the case. So looking at the chart, I continue to stay bullish. I think 100,000, 200,000 prices in Bitcoin, they're probably going to happen here over the next couple of years. It's the trend is pretty clean and continues to benefit the longs. Another thing that I try to look at is the weekly moving averages, where you can see the 200-week continuing to point upwards, right now sitting at about 17,000. Then you look at the 50, which is the intermediate trend, and that continued to provide support on dips to the price of Bitcoin here several times. And then you look at the more shorter term moving averages here, which is the 21-week, which is slightly lower right now, but that's kind of the first line of defense on any sell-offs. So I continue to stay, based on the trending market, I continue to kind of stay bullish and, looking for higher prices. If I drop this down to a daily chart, we have a little bit of a consolidation here. I'm going to take a look at the wave structures. We are sitting above the 21-day moving average as well, which holds the prices. Then you have 50 and the 200, which is still flat, but will probably start to swing upwards and reinitiate the trend once these prices break above 64 and above 66. So that's kind of a couple of the things that I'm trying to look at when I visualize the markets before I jump into any count, to kind of see what the overall structure is and what is the trend. So then I jump over to my larger term count, and you guys are familiar with my white count. that says that we have finished the wave 1 cycle. We finished the wave 2 cycle here back in 2020. And we've created this large impulse wave in this wave 1, in this kind of primary structure. And that finished back in the spring of this year, followed by a second wave pullback. So what happens here now is there's a couple of scenarios, and I'm going to run through both of them. One of them is that this wave 2 is complete, and we have already started to advance in this larger third wave, and we're just in the initial phase of that advance. But I've made a note here for my subscribers where I say that this wave 2 can continue to develop. Now, what does this mean? This means that we are considering the possibility that this wave 2 might still take a while to unfold. One of the clues that this wave 2 is done is a move above this wave 1 high, which was about 64,859, and that already happened. So based on that break to the upside, you have every reason to believe that this wave 3 has already started, because you already have taken out that high. And if you're thinking about your Elliott wave structures in terms of corrections, you know there's 3 types of corrections. You have zigzags, you have flats, and then you have triangles. So you can eliminate in here the possibility of this being a zigzag on the correction, because you already made a new all-time high. So you would have to go A, B, C for a zigzag, but that's not allowed since you already made a new all-time high. So the zigzag falls apart. The triangle scenario falls apart because you cannot have a triangle in a wave 2 position. So the only thing that you're pretty much left with to consider that this still is a second wave is a possibility of this being a flat correction, which means you would have a 3-wave decline in here in a wave A, you would go up here in a wave B, and then you would still sell off in a wave C. So that's the only thing. Now, I'm trying to keep my thinking very simple and just looking, straight at the price section. And I'm trying not to assume the hardest, but to assume the easiest. And it's have served me well over the years, because things once in motion, they tend to remain in motion, and it's the easiest path to follow. So if you're thinking that this is likely a flat scenario, there is no, you don't have a lot of arguments on that. The only thing you have is the thinking that, it's possible for that to happen. But the likelihood of that happening is lower, just because of the things that I've showed you before. If you look at the candlestick patterns, if you look at the trend, if you look at the moving averages, if you look at the, the trend of the market overall continues to show a move to the upside. So when you're thinking a flat correction in a wave C, you're basically fighting the trend of the market. Now, sure, it can happen, right? But it's much harder to kind of think that way, in my view. So, again, I've just kind of learned this over the years, not to fight the market and not to assume that you're going to get a sell-off just because a structure is possible. So I hope I kind of made myself understood there. Now, the moment you would break below this 39,767, that would be one of the clues that there's likely that this C wave of a flat is started, or we're in the middle of it, right? But until that happens, it's very hard for me to kind of say that or kind of wrap my hand around that structure. So I need price evidence from the market to convince me of that thought process, okay? And for right now, the markets have moved up, mind you, in 3 waves so far, but we're still kind of corrective of the highs, with a likelihood of an impulse to continue to go higher. And I'll show you a little bit of the wave counts on the smaller time frames. But the first clue that this wave 2 still can continue is a break below this 39,767. Now, before I jump to that flat scenario, I have something else that kind of, I keep in the back of my mind, and is the light and is the thinking that what if this wave count at a larger degree of trend is not correct? And what would be a next likely scenario? Well, it would be that this would be a wave 1 back in here. This would be a wave 2. That would be a 3, and you're still in a wave 4 back in here. So I keep that under my black count, where I counted just as such. Wave 2 primary finished here. You start an intermediate count, which is a lower degree. So you go in a 1, 2, 3, and now you're looking for a triangle in a fourth wave, followed by a fifth of a larger, primary third wave. So before I would jump onto a flat correction that calls for a larger sell-off in the C wave, I will look to continue to remain bullish the market and look to see how this formation here can develop more of a sideways move. And that would be a triangle in a fourth wave. Remember, you cannot have it in a wave 2, so you have to change the underlying structure, looking back at the higher degree of trend. So that would mean that this would be a wave A. It's a complex move. You can just count it as a second in a WXY. You would go up in a B wave, right? So this is a move to new all-time highs, which will already make it into a running triangle. Every time a B wave overtakes the origin of the wave A, that's called a running triangle because it runs higher. So you would have a wave A, you would go up in this wave B, and then you start to do a C, D, and E. And there's a bunch of proportions between these waves. I talk about this in my course. I talk about this, all the time, in the premium channel, and even in the YouTube here. I have videos that explain what these relationships are between the waves and kind of what to look for, and how high this B wave can actually travel to still be considered a triangle. So we're still in those kind of regular parameters. And this would be one of the things that I would fall back onto in case you're starting to break lower. Now, the C wave would have to be in a three-wave decline, either a simple zigzag or a complex move, and it would just be kind of choppy, overlapping, and just slowly move sideways. If it is indeed a flat correction and this B wave, you start to kind of at the top of this B wave, and then you start to sell lower in the C, you would have to move very aggressively. So you would have to start a very impulsive sell-off, followed by a second wave, and then a three wave. You're going to take this 40K, very strong, and that's likely that's not going to be C wave of a decline, of a triangle. That's going to be, let's say, the larger C of a flat. So it needs to happen, fast and swift. It's a very kind of normal characteristics for wave C's of the flat. And if you want to know about it, all you have to do is just kind of look at the S&P 500 at the sell-off that happened last year in March and April, and then you will see what I mean when I talk about wave C of a flat, because you went up into the pandemic in this wave B, and then the wave C was very, very sharp to the downside. So that's the idea behind these counts. So we've covered pretty much everything in terms of where Bitcoin is longer term. We looked a little bit at the candlestick patterns. We looked a little bit at the moving averages. We looked at our impulsive Y count, which is my main primary count that I continue to follow and stay true to. And then, a little bit on to an alternate count in case Bitcoin, fails to rally here and it actually starts to move sideways a little bit more. So now I want to jump over to kind of our working counts, stuff that I work every single day into the pro room with the members, and we, this is kind of our working counts where we're looking at where price can travel, where we can take some trades, how we analyze this kind of beginning of the moves and end of moves, and kind of how we can position, shorter term to understand the price action overall. So going back to the white count, if you're looking at this as being a second wave pullback, that means that we're in the beginning of a larger third. That means that this is a wave 1 minor. So this is the way you start. You go impulse, and you have a very clean three-wave setback here, right? So you go in an ABC. So far, we're doing great. And now you're starting another impulse higher, which we're thinking is this wave 3 minor. Now, ideally, you want this wave 3 minor to travel 161.8 multiple of this wave 1, and you can use your FIB projection tools for that. In Motivate, it's a little bit easier because you have all this at the tip of your fingertips through some shortcuts, but you can do it in TradingView and any other analysis where you're basically extended. You measure a move from 0 to 1, you pull it back to the second wave, and that give you the projection higher in this wave third. Now, this wave 3 does not have to get all the way up there. It can be equal with the wave 1. It can even be smaller than wave 1, as long as it's not the smallest wave in the sequence. So that fifth wave that will happen after a finished fourth wave will have to be smaller in case this wave 3 does not get, let's say, extended to the upside. So this is one scenario that I look at where I count this as a 1, 2, and then you're looking for this 3 and 4. And then you can look at the internal structure of this wave 3, and you can count in a 1, 2, 3, maybe a 4th wave in here, and then a push higher in this 5th before you finish the 3rd wave. Now, this 4th wave here, I'm placing it as a finished wave already, back here at this 57,700, but we haven't really gotten an impulsive move to the upside yet, right? So what this kind of does, it forces me into a corner with my wave count, because now I have to measure this as a 1, 2, 1, 2 with a strong break to the upside. Measuring it like that, counting it like that would mean that this 5th wave will have to kind of be much stronger than even this wave 3rd, which is quite unlikely. So what I'm thinking right now, what kind of goes through my head, and what I'm going to talk more in depth on Monday in the program, is that I think this 4th wave might morph itself into a little bit of a triangle moving here. So you can go in an A, B, C, D, and E, and then just kind of create a triangle before you break higher in this 5th wave. So that's another possibility. When the prices don't do what you think they're going to do and they're actually moving sideways, you kind of always have to start considering a triangle scenario. So as you can notice, Elliott wave, it's not a very, very objective method, although it has a lot of rules that help you identify what the waves are. But it leaves subjectivity and art to yourself to kind of look at the evidence that the market gives you every single day. So it's an evidence-based approach where if things start to show, if the wave counts, if the price moves in a certain way, that gives you evidence that you should count it in a certain way. If price does not do that, you have to adapt and just, adjust your count, to fit the next likely scenario, right? So it's all about things moving into your favor and out of your favor, into your favor and out of your favor. You can never be 100% certain of anything that happens into the markets with any methodology that's out there. And believe me, I've tried a lot of them. And, Elliott wave is the best at keeping me, sane and, confident and, relaxed about where I'm at in the wave structure, because I know that I can always adapt and adjust myself to the new price structure, right? People that are, very stubborn in their approach and in their counting will tend to suffer over a long time by studying price, because it's going to happen more often than not that the price is not going to do what you think it's going to do. So just a little bit of a psychology take from Elliott wave, you have to be able to adapt and you have to be able to change. Now, you don't have to change the count structure every single day, right? That's not a good thing. So you have to have a certain level of conviction, but you need to wait for evidence if something does not work out. And that's the best word I can use, when I describe Elliott wave, that it's an evidence-based approach. So this is kind of what I'm thinking. The other possibility in terms of this advance is that this could be a wave 1, 2, and then you're getting another 1, 2. Now, what this does is it actually pushes, the count to be extremely bullish, right? And then you got to look for evidence if that happens, or if it doesn't happen, right? If you're expecting a bullish move and that doesn't break higher, then that's the market giving you a signal that you probably have to revisit your count. And I think I have it in here. I don't know if I prepared it for this shot, but it's basically this. So I'm just going to kind of run you through it. I haven't really counted it from the lows, but you would go in a wave 1, wave 2, and then this would be another wave 1 with another wave 2 in here, because you're looking for this decline in 3 waves to be a wave W, then you're pushing higher in this wave X, and now you're looking to see if possibly you might get a Y wave decline back to the 4th wave of a lesser degree, which would be this kind of 53,400, where you would finish up a second wave. Now, anything bigger than that, and if you look at it, you can actually, quite well identify this channel that the price is in, and it would be a, pretty suitable count for that 1, 2, 1, 2 formation, because you're looking for equality. These two lines are very much equal. The slope of the second wave is a little bit less aggressive than the slope of this, larger degree second wave. And you will look for these levels. So if I were to trade the Bitcoin from the long side, and if I were to kind of look at some important levels to get in, to take advantage of the move to the upside, somewhere up into these levels, the price would start to pique my interest, and I would start to kind of look at it from the possibility of building a long position, because I have a bunch of things that would kind of fit the narrative, looking bullish, and you would have a lot of overlapping structures right at those levels. So you would have the fourth wave of a previous degree, you would have, the bottom of the channel, you would have some fib equality between the waves, right? You would have a certain fib retracement. So you're looking for a, conglomerate of reasons, to build that case to make you take a long position, right? Up here, up into these levels, it's still a little bit harder. Although we tried a couple of times just on the smaller time frames to see if we can squeeze a move to the upside, but it really hasn't panned out because there is not a lot of things to really go by when you're at the all-time highs, when you have a bunch of kind of, structures that just kind of morph into each other and the price is choppy, right? You want to wait a little bit for the market to come to a level that's better for you, where you have more reasons to initiate a longer position. And again, this depends on your time frame. And if you're looking, let's say, at day trade, or if you're looking at the 2-3 month down the road, or maybe 4 weeks, you kind of have to always keep that into the perspective. So for me, for example, to take a trade that would take a little bit longer, I would like to meet certain criteria. So this would be that kind of 1-2 scenario on a move to the upside. So I hope I kind of made myself pretty clear. I know I went in a lot of depth, but it's kind of what I like to do. And sometimes I go down the rabbit holes, and you can never pull me out of there because I continue to talk about, all kind of possibilities. But I'm just trying to walk you through my thought process and kind of how I kind of dissect the waves and the counts and the reasons. Because, there's a lot of other things that happen in a trader's mind when they look at the chart, and you try to stay, as analytical and as objective as possible without being, emotionally overwhelmed, I should say. All right, let's jump over and take a look at the Ethereum, because this is, another part of our analysis here every couple of weeks. And I'm going to start just like I did with Bitcoin by looking at the longer term chart and just pulling, a naked chart of Ethereum, just what I look at candles, price structures. Now I know I do have, a couple of waves in here. This just kind of helped me visualize the longer trend, but I'm still analyzing kind of what happens in terms of a price structure. So if you look to the left here, you would see that, these two formations are very, very similar. And let me just kind of get rid of my, my cross there. And basically you've had a big, let's say, almost bearish engulfing structure, and that kind of failed to resume to the downside, right? When you see a failure like that, you're thinking, oh boy, they tried to break it higher, and now, they're going to take this market to the woodshed. And then you did get, pretty strong sell-off in Ethereum back in September, but that was followed very, very quickly on the weekly time frames by this kind of bullish engulfing candle. And ever since that happened, what this kind of tells you, this pattern, right, failed to materialize. And now you've gotten, another one that kind of points into the other direction. So when you have a failed pattern like that, follow, by a bullish pattern, that usually tells you that the market is ready to rally in the opposite direction, and usually tells you that there is a strong up rally coming. So, just looking at the weekly time frames, it's been a very slow grind higher. If you look at the size of some of the candles previously in 2020, 2021, they were pretty large and pretty strong. Even the ones back in here at the beginning of, the beginning of the year, summer, June, July here, August. So, the shape of these candles, it's bullish. Every single week we close higher than we open, right? Which is the characteristic of a bullish trend. You pretty much made higher highs and higher lows, on every single week. And it's almost like it's building a strong ramp to the upside, right? Because you don't have a lot of size into these candles. When you see, a strong move, you want to see a candle that looks like this, right? Or a candle that looks like that. So I think the Ethereum, it's kind of building something like that. And it's possibly that, the next move higher here, either this week or maybe the next week, will be, it could be a $3,000-$4,000 candle that can push this thing all the way to, 6,000, 7,000, 8,000, something like that. But we still have a little bit to go until the end of the year. That's the dotted line that's vertical. But in terms of kind of what I'm seeing on the price here, I have no reason to stay bearish on it, right? I have no reason from any of this price to tell me, listen, you should be bearish on Ethereum. Because of the price structure, right? They're continuing to buy this market. every single week. You know, mind you, sometimes slower, sometimes faster, but it continues to be a bullish environment in here. Now, yeah, you could be scared a little bit when something like this happens. You have all the reasons to do that, right? And to say, well, the market will take a pause, you might get into a deeper correction, you know, and it's fair to assume. But the moment you're continuing to move bullish to the upside, I think that's, you know, that's pretty straightforward right there. So that's why I kind of like to look at the, you know, at the candlestick patterns. And then on the monthly candles in here, you know, you will see a little bit cleaner, kind of even the overall structure. So if you look at the wave 1 cycle in here, wave 2 back there, and then another push up higher in this wave 1 primary with a retest of the breakout in a second wave, you know, a couple of nice hammers back in here that tell you that the market is about to continue higher. And here we go. You know, the month, you know, the previous month, the month of November the month of October was pretty strong with the fully close to new all-time highs there. And this should be, you know, followed by another bullish candle higher. So this is kind of what I think is going to happen in the month of November. And then, you know, you can look, if this is a second wave and that's a third, oh boy, I don't have my line open, but this can, you know, push Ethereum, you know, over the next couple of years much higher, like 20, 30,000, 40,000 and above. So I know these are some crazy price predictions, but just based on the wave structure, I think it's you know, based on the size of these impulses, it's fair to assume that if this market, you know, continues to grow and you know, the network develops, that those prices will get achieved in the future. And then if you look at the moving averages, it's a similar story, right? I'm looking at the 1 week chart where all the moving averages are pointing higher. You have a pretty clean trend. You haven't really retested the 50-week moving averages like you've done in Bitcoin. A couple of times you were trying to come near it, but the 21-week, you know, did its job and provided well support. And then the 200-week, it's back at 817, which, you know, should provide, you know, very, very good support in case of any, you know, market crashes, as they call them. But I hope we don't have to get there. On the daily time frames, things are looking bullish as well. I mean, the 200-day moving average, it's pointing, you know, higher and trending, unlike in Bitcoin where it's a little bit flatter. So, you know, in terms of strength, I think this market shows, you know, shows it right here. I mean, the 21-day supports prices. You got a 50-day below it at about 36.93 at the moment. Let me see what other counts I have here. So in terms of the bullish counts, right, it's just the one I showed you on the candlestick. It's a 1-2-1-2 with the move higher in this larger third wave. This is just the initial phase. So you will look at another wave 1 of these lows. Let's say at an intermediate degree, that's just the initial phase in 1, 2, 3, 4, 5. So you continue to kind of build impulses to the upside. It's a very long time frame, so you know they don't. I don't show that back in there. But I do want to show you the other kind of count I talked about a couple of weeks ago as well, where just like in Bitcoin, what if I'm wrong in thinking that this, you know, it's a second wave cycle complete, and unless you have a 1, 2. Just like I have it in here, and then this is a third, and now you're doing maybe a fourth wave triangle in this kind of running triangle formation. Again, no reason to believe that that's the case. This we're continuing to push higher right in there, so I would have to increase the size of this B wave, and let's just do, for the sake of the argument, an analysis here in terms of B versus A. So you can look and see that you've passed 100%, so you're getting close to these are kind of the levels that I would like to see for a running triangle. Anything higher than that, it starts to be problematic that it is a running triangle, which is 127 and 138. So anywhere between, let's say, you know, 50, whatever the level is there. Let me just see really quickly. So that's 55, and then between 55 and 62, it's, you know, this B wave, you know, in comparison with this A wave decline. So that would be kind of the highest I would like to see this, even for a flat. Anything higher than that into the 1618 starts to be, you know, a big stretch onto that count. So if you see Ethereum towards 7,000, 7,500, it's very unlikely that it's going to be wave B of a flat or of a triangle. So that's kind of one of the things I would kind of fall back on in case Ethereum starts to, you know, block in here and don't find the strength to continue. It will be an ABC up followed by a C wave decline in another ABC. So let me go a little bit to our you know, other counts there on Ethereum, and I'll pull this up from the, you know, kind of our working counts, and I'm going to go here, right? And you know, this is the structure that I'm looking at. So that's kind of second wave in this WXY, and then you're pushing higher here in this wave 1, all right? And, you know, I have a slight issue with this wave one impulse just because of the way this move out of here looks. Like it's almost like a triangle, and you have a maybe a small second wave back in here. You know, you can actually count it from these lows, but I don't really like that because, you know, and I've had this discussion with my members, with, you know, with a bunch of people on Twitter and on Telegram about where the second wave placement it is. And I think that the most obvious way it is here combined with Bitcoin. You know, if you look at some line charts, you will see kind of where those lows are. And, I think this makes more sense than placing the second wave, up into these levels. So the only issue that I have is that this move in here, it's a little bit extended compared with anything that I would have as a second wave back into these levels. So anyway, this is a clean second wave pullback. I mean, or a three wave pullback in an ABC. This was a perfect place to kind of get long Ethereum. Even looking in hindsight, you could see how this move kind of failed to continue as part of an impulse. And then you're starting to move higher in this larger, you know, third wave minor right in there, right? That's kind of the move that we're looking for. And, you know, I was looking at this wave one to maybe place it back into these levels, go that as a 1-2, but then you would kind of also run into the same issue that you have in Bitcoin, where this wave three minor will be a little bit smaller. So I'm giving actually this wave minute, you know, wave one a little bit more room to develop, and then eventually, you know, look for a second wave in Ethereum that would create that 1-2-1-2 formation. But the longer this moves, the harder it's going to be for me to consider this a wave one, and I would have to, you know, maybe push this back lower like that and consider this maybe, you know, a third wave in progress that's through a series of, you know, corrections and impulses, and creates that extended third wave formation where you're continuing to make higher highs and higher lows, but you don't have, you know, the precise counting of this internal third wave move. And this is one of the, and I want to take a little pause here, it's one of the reasons why sometimes I don't go and count these waves, you know, on the smaller time frames, because, you know, especially on a move that's kind of difficult to count, there is no reason to do that. You would kind of run yourself into a lot of conflicting, you know, ideas about how to count that move, and I would rather just, you know, use my energy to do something else, and then just kind of let the wave count continue to develop. And then once it becomes more clear what it is, you know, then you start to place the count, right? I'm not in a contest here with anybody out there to kind of say, well, he cannot count this wave, he cannot count this wave, or, you know, I'm first at counting this and you're last at counting, you know, stuff like this. It's irrelevant to me after so many years of trading. I'm very content with myself and just saying, listen, I think it's a pretty hard structure to count. There is no point in wasting energy on it. You just kind of let it to develop, and then when it's done, we will know, because you would get the appropriate sell-off. And if it's going to be a second wave or if it's going to be a fourth wave, we'll know sure enough. I continue to remain long Ethereum. I'm long, you know, way below $1,000. So it's, you know, I continue to stay long this market and look for every reason I have to remain long, right? Because it's a market that's trending. So arguing with the wave structures, I think it's futile at the moment. And based on kind of what I see on those price structures, I think we're basically moving impulsively into this larger, you know, larger third wave, let's say at the minor degree at the moment. And then, you know, we'll see what happens. You'll eventually finish, you know, a wave one intermediate, and then we'll do a second, and then we'll continue to push to the upside. So that's kind of where I'm at in, you know, in Ethereum. There is not, you know, a whole lot of other things to really, you know, talk about in the Ethereum price structures. I know I haven't done, you know, much talk about the alts. I do that in the program every single day. We have live streams in there when I try to touch on a lot of the coins that people in my room like and love. And, you know, we try to go to some of those counts. I also have my own portfolio of coins that I, you know, follow through on a regular basis. We have a chart room in there that's, you know, follows, I think, 10 or 12 coins, you know, with longer term charts that I update on a regular basis based on, you know, at least in, you know, how the price moves. And you know, again, I don't do very often modifications because, you know, if you're staying true to a structure and that continues to stay valid, there is no point in changing it. Okay, so you're not gonna get scared of any, you know, every little sell-off into the market of a 5-10%, and it automatically adjusts your wave count, you know, just because you believe something else is going to happen, right? You have to kind of stay true to the price structure.